What can I write off in my business? What can I write off on my tax return? Made a video about it. Want to hear it? Here it goes. What can I write off in my business is probably one of the top 10 questions I get asked. Now, the answer to that question is probably not as complicated as you think. The answer to that question is in tax law. It's in the Internal Revenue Code. So what is the question you should ask yourself to determine whether you can write something off? And it is my expense, the thing I'm about to buy, is it an ordinary and necessary expense for my type of business? Again, is it an ordinary and necessary expense for my type of business? And here it is in the Internal Revenue Code. It's section 162. And it says, there shall be allowed as a deduction all the ordinary and necessary expenses paid or incurred during the taxable year in carrying on any trade or business. So, ordinary and necessary. What does that mean? Because you got to have both. Let me give you an example that will probably explain this than me kind of walking through it. I have a client that is a steel fabricator. What he does is he takes pieces of metal and he creates things. He creates chairs, he creates bookshelves, or someone will come to him and say, hey, we need a custom thing with like a flange or whatever. But anyway, he takes steel and he turns it into something that can be used. So I go to visit him. We do his inventory and everything because we're trying to figure out things for his inventory. And I see this welder and I'm like, man, that welder, that's pretty cool. I want one of those. I need to learn how to weld. So what do? I take my business credit card and I go buy a piece of welding equipment and I write it off as a tax deduction. Now, a steel fabricator, a welder, in order to do their job, they need welding equipment. But as a CPA, I don't need a welder in order to do my job. What am I going to weld together? And so that is a perfect example. His welding equipment is ordinary and necessary for his business. I don't need a welder in order to do tax returns. I don't need a welder in order to read the tax code. That's not an ordinary and necessary expense as part of my business. So I'm probably not going to be able to write off the welding equipment that I bought from my company because it's not an ordinary and necessary expense. And so that leads me to one of my points, which is don't get cute with your tax deductions. If you got to squirm, pontificate, explain, try to make it work in order for you to be able to take the tax deduction, in order for you to say, hey, this is what I need it for my business, yeah, it's probably not going to be tax deductible. So you can alleviate yourself from a lot of heartache and pain by just thinking, is this an ordinary and necessary expense for my business? Because if it is, a vast majority of the time, you don't need to talk to a tax professional about whether you can write it off because everyone in that line of work is buying the things that you're buying. If you're a photographer, you're not going to have to question whether you need to write off a camera. If you're a cybersecurity expert, you're not going to have to worry about whether you can write off the, antivirus equipment that you purchased for your business. If you're a construction worker, you're probably not going to have any problems writing off hammers and small tools because those are all the things that those people do within the normal course of their business. And so if you keep that in mind, whenever you're thinking about what you have to write off, you don't have to really pay anybody. You don't have to pay for an attorney or a CPA to figure out, hey, is this something I can legally write off? Because in the normal course of business, this is what people buy. Now, there are some things in the law that are more nuanced. Again, this is why before you incur any expenses, you should go talk to a tax professional related to that. And even in those cases, in order to substantiate that deduction, here come my two favorite phrases again that you will hear over and over again. The first thing you're going to want to do is have contemporaneous documentation around the thing that you're buying. In addition to having contemporaneous documentation, you want to make sure that evidence is sufficient, that you have substantial, say that 3 times fast, substantial evidence for that tax deduction. So it's got to be contemporaneous, and you want to have enough support and evidence for someone to say, okay, yeah, I could see how that expense makes sense. How the IRS can look at it and say, okay, I can see how that would be ordinary and necessary, or would fit into a specific condition to where your business needed that particular item. Then you would be able to legally and legitimately take the deduction for that particular expense. I'm going to harp on this as well until the cows come home, which is you need to think that at some point you could end up in court over this tax return. And here it is right on every tax return where you're supposed to sign. And a lot of people don't read this, but we're going to read it. And what it says here is when you sign this tax return, you are signing it under penalties of perjury. What is perjury? It's when you lie under oath. Where are you making an oath? Generally when you're going to go to court. And here are some tax court cases. And we can look at these tax court cases and they talk about tax issues. Here is one. Pevsner versus Commissioner. Sandra Pevsner worked for Yves Saint Laurent, and her employer required her to buy clothing as a part of her job. She was denied a tax deduction. And you can read the case and it'll talk about why she was denied the tax deduction. Spoiler alert, what she bought was something that could be used personally. And because she could use it personally, she was denied the deduction because she got a personal benefit for it. Here's another court case. Duncan versus the tax commissioner. He donated up to $25,000 of clothing. Spoiler alert, he wasn't able to take the tax deduction. And the reason why he wasn't able to take the tax deduction had to do with the rules around donating clothing. So all you people that go to Goodwill and you write off all this clothing, you want to talk to a tax professional before you write it off. Tax court cases go to the Supreme Court, the highest court in the land. Here's South Dakota versus Wayfair. Now, this is a sales tax court, but it still went to the Supreme Court. But you say, hey, that's a sales tax court, Roger. Give me one of these IRS, federal tax cases that went to the Supreme Court. I'm glad you asked. Here it is. Moore versus the United States. This is a federal income tax case, and this was done in June of 2024. This was just last year. A tax court case went to the Supreme Court, and it will have an impact on how tax returns are ultimately prepared. And you need to make sure if you go to the Supreme Court, you have enough contemporaneous documentation and sufficient evidence to support your tax deduction. So there it is, the answer to your question. How do I write things? How do I know what I can write off? If it's an ordinary and necessary expense, a vast majority of the time, you're going to be able to write it off. And if you have any questions about whether you can write something off, before you pay for it, reach out to a competent tax professional.